Welcome back to the channel. I got a very special video for you guys today, but first let's crack on with the update of Bitcoin, cryptocurrencies, and of course the stock market with that correlation between Bitcoin and the NASDAQ. We've seen a nice bounce overnight. So what does that mean for the price of cryptocurrency in the short term? And are we flipping yet again? First, smash the likes and subscribes. I know you hate hearing it, but it does help out the channel. If you did want to help the channel out more, let the video play right through on a very slow speed. That's how it helps. Anyway, also got the links to Bybit in the video description, up to $4,100 of sign-up bonuses. And it's a new month, which means it's time to get onto Patreon, become one of our TIA members. Link is in the top of the video description. If you do join in early in the month, that means you get the whole month access. And if you do start now on an annual membership, you also get 16% off, which means it's 2 months for free, plus you get this month for free as well, as the annual membership will technically kick in from June. So go and check that out below. We've got weekly group calls, plenty of benefits in the membership as well. Link will all be in the top of the video description. Now let's crack on with Bitcoin and the update here from the NASDAQ. You can see overnight that we dropped below those levels yet again. So that was now the third day that we dropped beneath the 14th of March. However, you can see the market has flipped. So it's a technical flip right there from the low to the high. We've closed above the previous low points, back now at 13,075 points on the NASDAQ. Overall, longer term, I'm still looking towards some sort of significant low coming up in the next couple of months, few months. Reason being is that we've got the double top in here. I tend to see these play out to about 125% to about 150%. Sometimes at some extremes, you can get it all the way down to a 200% move here. But let's take it one step at a time and look towards that 12,500 point on the NASDAQ, and then the 11,700 to about 12,000 points, of course, on the NASDAQ, which also lines up with some good support and resistance levels. But I think we need some more time. And in this video, I want to go through some of the mindset games that come into play when this specifically happens. It's great to see a lot of regular viewers and new viewers coming to the channel, especially in these times, which are the opportune times, of course, in my opinion, when it comes to investing. The sort of stuff that I'm going to talk about in today's video, most people didn't want to hear back at the peaks of the market, February, March, April of 2021. They definitely didn't want to hear it during the peaks of September, October, November of 2021 as well. This sort of stuff is for the longer term investors and longer term traders who are serious about making the most out of a market. And being that you're here in a crypto winter, crypto bear market, you're probably far more serious than 99% of people who are here to gamble on some NFTs or altcoins or ICOs back in 2021 and have since lost 80 to 90% of their portfolios, the poor souls, and have now left the markets when the better opportunities are coming up. This is the time that I like to get excited, even though I don't think we've seen a low. I think it takes some time, but I get way more excited at these times than I do at the peaks. The peaks are for chipping out of the positions. Even though people feel like they're making a lot of money, they tend to lose it all, as I've heard from tons of stories of people seeing the market go all the way up and then drop all the way back down. Speaking of which, Bitcoin over the last 24 to 48 hours has risen up. We've got a bit of volume, got rejected at 50%, which is around that $39,100 level. As you'll note from the last couple of videos, I was looking for a close above $39,200 to give us a nice clean number there. And then of course, the next number is $40,600. So we really need to reclaim these levels up here for Bitcoin to get a solid move on. So it's not all doom and gloom at this point. We definitely could be seeing a short-term low come in here, provided we do in the next couple of days get that move back above $39,200, because we've seen a little bit of a bounce and we want to see that momentum follow through in a shorter period of time rather than it languish at these levels and then come back to test the lows again. Overall, Bitcoin isn't looking so bad. It is holding up. We need to see that close. As for Ethereum, $2,850. It's doing a little better. You can see that it's had a higher close, but it's still getting rejected at its 50% level here. You can see the major here is $28.70. We take this level, bring it back to a previous high. Now, the level, of course, $29.50 needs to overcome that. Did have some good volume yesterday, which is a good sign. And of course, again, the same story. Let's see if we can push through and break out through this trend to hold that momentum of the bulls. As for some of the alts, the main one I've been covering here is Solana because I posted about it live on the channel when I was buying and selling, just as an example of taking profits, flipping on the idea of holding a crypto which you can love and want to get into bed with, but at the end of the day, kick them to the curb, take your profits and move on to the next thing. At the times, I get absolutely crucified because of the particular armies that people are based around in these cryptos. Absolutely moronic, in my opinion, if you want to try and make some money from the market. But nonetheless, that's why we have these mega booms and busts, because the tribalism is alive and well in the human psyche. All right. Solana ETH has broken down. It has reached a new local low, and which is why I was not buying up Solana during that period of March when a lot of the excitement came back into the market. Bulls had to reclaim this level. They didn't do it. It got rejected twice and then came back down, so we can get rid of that. Step one, I was looking for the market to recover. It got rejected. We can get rid of that. And now we've come back to test some of these lows. So although we've seen a very minor capitulation over the last couple of days, this big move down over the weekend, the market is trying to attempt to come back and take some of those gains back from ETH and Bitcoin, market being the altcoins. And it's really trying to do that at this point. But of course, the next couple of days, we'll see if it can regain. As I've said many times, make sure you check these out on your cryptocurrencies that you're following, because you don't want to be losing out gains to ETH and Bitcoin when they're the safer bets, rather than getting all caught up in some of the hopes and dreams of 2021. Because if you get caught up in those hopes and dreams, you can end up being something like any other altcoin out there that there's nearly probably 20,000 of them. And the losses can rack up very quickly, even though they don't look like much from an all-time high. Just as an example for numbers, we looked at this in January. It doesn't matter what the cryptocurrency is, really. It's just about the numbers. From the all-time high to that point in January, it was down 80%. Check this out in your own portfolios, 80%. The market can go down to 90%. And look at this now. It's a couple of months later, a few months later now, and it's halfway to that point of 90% down from the all-time high. But the real big kicker here that a lot of people don't realize is from 80% to 90%, in your portfolio or in that particular crypto that you're holding or that asset, if it goes from that price, it's actually a 50% loss. So you go to that low there, 50%. From that point to that point, which is $1.60 to about 80 cents, it's another 50% loss. You might not care if you've only got $100 left in the crypto at $1.60, and now you've only got $50 left. What does that matter at the end of the day? But if you are holding a lot more, and people saying, well, I should just keep dollar cost averaging into these things, remember 2017, a lot of these cryptos never came back. And if you want to be a longer term trader or investor, you need to protect capital. Number one rule, protect your capital. Which leads me on to the story that I wanted to share with you guys. I read a lot when it comes to markets and traditional investors and traders and how they played the market. If you're not familiar with Stanley Druckenmiller, you probably should be. He's one of those old school billionaires, a massive records trading in traditional markets, and he's talked about here, warns about crypto, but then gets into crypto. Legendary hedge fund billionaire just flipped to Bitcoin. This was back in late 2020 before the market started taking off, so he probably had set his position during those lows of Bitcoin in 2020 and then started talking about Bitcoins. Stanley Druckenmiller had phenomenal success with Duquesne Capital. That is how you say it. I specifically looked it up right here.
Duquesne.
There you go, Duquesne. He's 68 years old, $6.8 billion of net worth, $12 billion. He was making 30% per annum. People laugh at that, especially in crypto, but now you can see how difficult it actually is. So phenomenal record. And Stanley also is able to flip at the drop of a dime. This is just a quality of a long-term trader, someone who's been in the market and understands the game. As I said, I love to read about these old school traders, the guys who have done it in the market, produced phenomenal results, and still live to tell the tale of how it all works. I was reading this earlier this morning when I couldn't sleep, and I've read this book a couple of times now. Check out Market Wizards by Jack Schwager. It's a really fantastic book, and it's something that pretty much all traders that come into the space have read. They've read Market Wizards. If you haven't read it, go and check it out. But let's look at the story here from Druckenmiller, and what we can learn from this in the cryptocurrency markets, because at the end of the day, this is going to be the biggest part when it comes to understanding what we do, our psychology, and being able to flip just like these guys do. So Stanley Druckenmiller, Duquesne Capital Management, average annual return near 30% over a 25-year period. So phenomenal, one of the best in the industry. The story begins on October 16th, 1987. What was October 16th in 1987? Well, we're a couple of months down from the all-time high on the S&P. This was just the day before, if you don't remember or haven't ever studied this before, the Black Friday. So the 16th was a Friday. The Monday, the market tanked. Markets don't open on the weekend like they are in crypto. Tanked 50%. Druckenmiller was managing multiple funds for Dreyfus in addition to his own Duquesne fund. Druckenmiller came into that Friday net short. So he was basically shorting the market at one of the best times, right? And to explain the story a little bit further, from the 16th and on the chart to the 19th, you can just see how much the market got absolutely killed on that day. If I take it off log, you can see that pretty much everything was wiped out in those couple of days. So Druckenmiller was short this day here, the 16th. That's it. That's the Friday there. He basically went from short to long, as it says here, in the midst of a near 20% slide that had begun 2 months earlier. That's what we can see here. Market's heading down. This is the Friday bar right there. Druckenmiller decided the market had fallen far enough and he was near what he believed would be a major support area. How wrong was Druckenmiller, one of the best traders in the world? Super wrong at that point. So he covered his short. That was a bad move because he could have made a lot more money. But in fact, Druckenmiller switched from net short to a net long leverage position on that day. That would absolutely wipe you out. Every gain you'd ever made in your entire history to that point. You got a year of massive gains, and then you'd switch to a leveraged long position when the market absolutely tanks against you. So the author Jack explains here that when describing this episode, he used to ask the audience if anyone ever had made a worse trading mistake. Have you ever made a worse trading mistake than this? And he says he stopped asking this question because you cannot make a worse mistake than trying to go long on the Friday at the close when the market the next day opens up and gets absolutely destroyed by 20% in that one trading day. Now, here comes a critical lesson that we all need to learn in crypto. We need to be fluid in the markets. We need to be able to flip when we believe that the information has changed. And that could happen just over the course of a few hours, as is the case with crypto because it's open 24/7. In this case, Stanley is looking at the weekend between Friday's close and Monday's open. Druckenmiller decided he had made a terrible mistake. Why that's not what happened was not important at this point. The point is that Druckenmiller realized he had gravely erred by going heavily long and was determined to get out of his position on Monday morning. The only problem with this plan was that the markets opened enormously lower on Monday morning. So what did he do? Covered his entire long position in the first hour of trading. Not only did he cover the long, so instead of just saying, all right, I'm out of my position that I think it's going up, get out of it, he then flipped it and went short into the market again. So think of the incredible lack of loyalty to a position. The incredible lack of loyalty to a position. Moving forward into 2022, if you're watching this at home and you got stuck in a position in 2021, maybe you're even stuck in a position now that you are being so loyal to because you believe it will produce some results later, really rethink that position. And if it is still something that you want to be stuck with, by all means. But look at the incredible lack of loyalty to a position here. It was long. Then he got out of the long position saying, I don't think it's going to go up anymore. I think it's going to go down. And because I think it's going to go down, I'm going to short the shit out of it, make that money back, and then hopefully not end up in a massive losing position. So the lesson here is good traders liquidate their positions when they believe they are wrong. That can happen at any time. It could be within the minutes. It could be in the hours. It doesn't need to be a longer term picture of months or years until you hear from the CEO or the founder telling you that smart contracts are going to take a lot longer until they're produced. Just hang on, everyone. It's going to take time. Good traders liquidate their positions. They don't give a flying F about what goes on. Now, if you want to get into the great traders position, and I don't consider myself there at all because I'm not flipping and then going short on these things, but I definitely will sell out, and that's what I talk about to my members all the time. That's in Patreon. You guys can get access to that. Link is in the top of the video description. But I'll definitely just be selling out of my positions if things are not going right, regardless of what happens in 6 or 12 months time. The main thing is I want to protect my capital. So good traders liquidate their positions when they believe they are wrong. So the long-term lesson there is make sure that you can get out of your position. Stick to your plans. If your plans say stay with it, stay with it. If your plans say something isn't right here, then definitely get out. You don't have to marry any of these projects. Eventually, there's going to be something that pays off. And if you have the capital remaining to invest, then you're going to be able to fight for another day. You'll survive in the markets and make a good long-term career out of this. It was something a little different for today's video, but honestly, I'm more about education and learning to survive in the markets long term. It's something that I do on a daily basis. I write to my members with my own trading journals and what I'm thinking and doing in the markets, even if my trades don't work out, which some of them recently haven't. So check out the link, top of the video description. That's for Patreon. If you want to join us for more learning about this, I love talking about it, and let me know in the comments down below if you enjoyed this type of video, this sort of learning, and of course, a bit of storytelling goes a long way in the markets when they are just a tad bit slow. Like and subscribe or watch the video all the way through if you haven't already. I'll see you guys at the next video. Until then, have more fun to get more done.